purposes and should not be considered trade advice. The presenter of this video and or the team at Tradespoon may have a financial interest in the securities presented and the trade picks. With that, why don't we get into a brief touch on some of the stuff we're seeing right now? Compounding investment is going to be big as we go into the election. I still think, we had a big move in China yesterday. Now I'm looking for some sort of clarification on what the next chart formation is going to be there. But let's talk about the chart formations that are a little clearer as we go through some of these names and some of the fallout from that move by China yesterday. All right, that's going to be, I think, one of the big things. We'll touch on earnings and some other stuff, looking for some ways to have compounding investment by trading within the comfort zone and the interest point of what we've got. That compounding investment is usually, traditionally, best seen through higher probability of success, just because of the mental wear and tear of low probability, high return trades, but those do have a place in a portfolio if that is something that interests you. It has a little bit more of a up and down psychological effect, but it can be very profitable. At the end of the day, looking for expected value is one of the big ones, but factoring in your own personal psychology and probability of success is big. 2 to 3 days to confirm a trend change. I'm not seeing a very clear trend change right now. It still seems like higher prices are the natural. The stimulus from China is impacting some of the expectations for the Fed for November. Obviously, the election is going to be big. There's a lot of stuff coming up, non-farm payrolls next week, VP debate. So we've got some stuff coming out, but at the end of the day, does any of it really matter to the stock market other than pricing in extra risk and thus keeping the VIX maybe a little bit elevated because of potential for 1 or 2 day kind of moves, okay? And the data make trades certainly helpful. Yesterday, we saw in the morning, it was a little unclear if the market was going to get continuation off of the China news. And it seemed like really the answer was, yeah, sure, why not? Why not buy into this market? Okay. Not chase trading. So I'm avoiding the big movers from China for now. That doesn't mean that I'm not going to ever trade them again. It means that for now, they're not my trade style. That's a chase trade for me. Trying to fade them is a revenge trade. There's a lot of ways to just, if you got some China stuff, taking money is not a bad concept, and looking for a better leveraged, higher expected value return with a little bit more clarity in the technical charts and or opportunity in the implied volatility. With that, I don't want to spend too much more time on this. I want to get into some charts and things and start thinking about what we could do today in this market. It seems like we're getting a little bit of a pullback, but overall, first things first, we're kind of finding a comfort zone, it seems, in the 10-year yield, okay? 10-year yield sitting at 3.76 right now. This range between 3.6 and 3.8 seems to be our new norm. We're looking for a range-bound trade there that can just create confidence in the market that we know that the economy is fine, so we don't need to lower rates for the long term because of a potential recession concern. We don't need to raise rates to fight off inflation. That was something that could be considered a little bit concerning with stimulus starting to come out of China that could create industrial demand. We're seeing that in gold, silver, and other places like even fertilizer. CF had a good day yesterday. Mosaic is starting to look a little bit better today. I'll touch on those charts. Overall, I think that the economy is we're being told that the economy is not going to go into a deep, dark recession. And that's, I think, a fair estimate of where we're at right now. Okay. Does that mean the stock market has to go higher? Absolutely not. Does that mean the stock market has to go lower? Absolutely not. We got to let the charts tell us on that stuff until we start seeing economic data that says recession seems a little bit higher probability or lower probability. Good morning, Orlando. Hopefully, I actually don't know on the geography. Hopefully, Orlando is not too risky with the hurricane there, Bob. But if so, stay safe. I hope you're good. And everybody else that's impacted on the hurricane, please stay safe. All right. So that's the 10-year yield. We're still pre-market, so we'll pull up the VIX as well, since that's a cash index and it trades, all the time, basically. You see the VIX drifting back down towards lows here. We're kind of in that low lull point. What gets the VIX down below 14.5? Frankly, at this point, I don't see it. The VIX is the future implied volatility for the next 30 days. In a couple of days here, that's going to factor in an election, or about a week, I guess. So that's going to start factoring in an election. It's going to factor in another non-farm payroll once we get into the beginning of October. I don't know that I see the VIX really getting hit unless we haven't what we believe to be an answer with tail risk to the election. But again, I don't think tail risk of switching from Harris or Trump to be the next president is going to cause a massive liquidation of the market. We would need an outlier type event that I just can't come up with right now. So I don't see the tail risk there. SDEX, the skew index, is saying that there is still some tail risk to the market, but I believe that's because the VIX is low. Okay, so with the VIX low, people are buying puts; they're not buying out the money options. If you go to the skew index, it compares calls to puts, and we're seeing right now that the skew is actually starting to come down. So people are still buying puts, but now they're also buying calls. Okay, so we saw that from SDEX that people are buying puts relative to the at the monies. With the skew index, which compares calls to puts, we're seeing that the calls are not coming down. They actually have to be going up in order for the skew index to come, for this index to come down. So people are buying both. We're not buy writing the market. We're not financing put purchases. Effectively, the market is buying strangles and selling straddles. We're either going to consolidate or move a lot. We're not going to move a little. Is kind of. I'll say that again because it may be a little bit hard to visualize. SDEX compares puts to straddles. So VIX coming down means straddles are coming down. SDEX going up or staying stable means puts are coming up or staying stable. This index, which compares calls to puts coming down, means calls are coming up relative to puts, which means people are buying calls, they're buying puts, and they're not buying straddles. Okay, that's the general philosophy here. Financing the trade by saying consolidation is possible or probably likely, given the VIX fall, but buying out those wings in order to finance or in order to protect those trades and or bet on a bigger move. So that's the net of what the options market is telling me. We don't expect a drift higher or a drift lower. And we'll see if the market's right on that. That could be a mispricing because, frankly, to the upside, I'm not sure I see a gap higher for the broad market the way we saw in China. We're not talking about introducing a bunch of stimulus. What we are talking about from the FOMC, though, is a potential for a 50 bips rate cut in the November 7th meeting. That seems to be increasing in odds here. A week ago, it was only a 37% chance. A month ago, it was only a 13% chance. Now that's the odds-on favorite. This is shifting a lot over the last few days. I think it'll continue to shift next week's data. That's going to have impact on rates and the rate term structure and everything else. We just got to kind of watch it as a way to tell us what the economy and what the market thinks we need. I'm a little concerned that some of the stimulus stuff could cause inflation, and that could lower the odds of this. But for now, we're actually increasing the odds of a bigger drop, maybe in order to combat what happened in China, and that can be good for the market. So with that, we'll go back to these markets. One more to look at here on this whole rate structure is the dollar index. And you can see that that's sitting right around par again, really close to the lows here of the last 6 months. When I go out longer term, really this level at 100 is going to be key. Par is key. It was the low for the last 2 years, July of 2023. Sorry, I'm getting a little bit of a sore throat, but it's that time of year. So we're seeing a little bit of potential for a dollar break, and I think that could cause a further move higher in precious metals and other commodities, as well as Bitcoin. Okay. Let's go to the market, but why don't we start with the precious metals and China, and then we'll come back to the market because I want to touch on the China stuff. There is a subsector of this, which is the gold miners, that I want to touch on, but I want to focus on some other ideas that you guys are going to be looking at. Okay. Interesting on the E-Trade thing. They dropped their high interest saving percentage. Win rates actually went up after the cut. That is a good margin then for these these brokerage firms. They can be more profitable. That could actually benefit the financials in that sense. Let's look quickly at FXI, it's getting a pullback today. So currently trading 29.40, was 30.40 at the end of the day yesterday. That big move, there you go. 3% pullback today. That is not a bearish situation. That's just a pullback. We can look at what the market did to China real quick in overall terms, just so that we get a sense of what this explosion did. We exploded the price up to 30.40. We're coming back to the lows of yesterday's range from the US session. And you can see that this implied volatility really spiked. So basically people are chasing this trade. They're looking for a lot of chop while we try to figure out the next technical formation. Is there going to be profit taking? Is there going to be continuation? Right now it looks like profit taking. That doesn't mean anything bad for me. It means that I can look for those sectors that I may have missed out on that might be on the cusp of a move and try to execute something there going forward. So for me, those are looking at those precious metals again. Gold now unchanged, really not going anywhere today. Consolidation, high RSI. Silver was the bigger one for me, and that had the bigger kind of breakout type move. Sitting around these highs, get above yesterday's high. I think that's really bullish for silver, and you can see the RSI didn't get above 70. But what didn't seem to perform quite as well as I had expected was actually the miners. So the miners are still sitting a little bit lower. Yes, we had the breakout. It does tend to trade a lot with silver, and this has been going a little bit ahead of that because gold has just been so strong. But the miners seem like they want to have some money allocation, as well as XME, the metals and mining ETF. Now, one of the big components of this ETF is NEM. And this is actually the trade that I was evaluating yesterday. I still like it. Pre-market, it was down a little bit. Now it's back up. But, I'm looking at this as maybe an analogous to what happened in August, where after non-farm payrolls, we drifted higher about $3.5. So around 7%, 6 to 7%. If we get 6 to 7% from the 55 level, I'm looking at like a 58.5, 59 kind of price target. So if I get a similar move, 3.5%. With the magnitude of the move in China, I think it could even be more than that. Now that started out still a vertical, just in order to define my risk, knowing that non-farm payrolls next week could cause a little bit more chop. But I didn't see that implied volatility spike the way in China because we didn't see the move that we saw in the FXI ETF. It is still a little bit higher on a bearish scenario where gold and silver either pull back or consolidate. This implied volatility can probably get back down towards 30%. But if I start looking into some weeklies, like a 1 month kind of trade, not going to have to price in too much extra volatility for, there's a little bit of earnings volatility there. The 18th would be a benefit. It's a little bit tight on the time. But looking at like a 56, 60 call spread can seem to me to be a way to execute this kind of idea. About above 20. So it's about 30% of the max value. That would be targeting more like 60, a little bit higher move than my initial expectation of maybe 58.5, 59. But I don't mind having a little extra room on that call spread. I do like to sell 20 delta calls in a vertical because those are only about a 20% chance of finishing in the money. Those things all go up really quick if we see a move like FXI. But if we see more of a catch-up trade that's slow, grinding, 0.25%, 0.5% over and over and over, this can be a really good structure for the trade. So I'm going to watch NEM for a potential entry today in this call spread, the 56.60. I actually think that's currently one of my favorite trades. Bob, you mentioned gold. So I want to pull up Barrick here. That's another big component of these gold miners. It is consolidating near the highs. I liked this setup as well. This is looking like it's setting up a bit of a bull flag. If we get above yesterday's high, which is a penny away, this starts looking like it's got well more than just a 21 move. I'm kind of thinking a little bit more. We don't have to worry as much. I mean, earnings is a little bit later, the 31st. The implied volatility is still very similar to NEM, 32%. You can see it spiking towards 35 or 36 if we get some more money flow into these miners. Going into the October terms can be pretty good. Earnings really doesn't have a huge impact on this kind of stock normally. Last time it was big, 9%. That's a little bit of a different, very much an outlier. So we're going to price in a little bit more volatility for earnings. But overall, I think this is another good trade opportunity. The weeklies here showing no liquidity on the 21s at this time of day. But if I start looking for a similar call spread, if I wanted to go call spread, it's like 21.5, 23. I know 15 cents doesn't sound like a lot to sell an option. It depends upon I don't want to sell a 15-cent option if I'm paying heavy commissions and paying a large percentage of that in commissions. And in that sense, I would only just buy the call, either the 21s, 21.5s. Let that ride for a little bit and see how it goes. The November option, if I needed more time, definitely a vertical type trade there. And I'd probably sell the 24s in my vertical. So looking at like a 21-24 kind of call spread here. Similar type of setup to NEM. Gold is not as big of a component. Barrick is just not as big of a component of the double of both GDX and XME, which is why I kind of highlighted NEM. It's near the top on both of those for the percentage allocation in those ETFs. But I do think these gold miners have some good upside. And I'm just trying to pick my favorite. And right now it's NEM. Gold was like a close second for me, though, I will admit. Okay. Kinross could be another name. There's all sorts of names here that can be looked at, and they all have very similar setups. Average now starting to show signs of a trend, getting close to these highs. I think there's some opportunity here. This is doing better than Barrick in that it's had 4 days of confirmed bullishness. The potential resistance at $10 is there, but really, I just don't see why that would hold. I don't see justification for this to stall. But I do need more time than obviously this week. I like to have at least 3 weeks. 1, 2, 3 is the 18th. 4 weeks for the 25s if possible. And going out to November if I'm really more concerned with just adding some time here. I like some leverage because right now we are getting that movement out of China. And because we're getting that movement, I like these miners a lot. And I think that these miners could be a very good leveraged way to play that continuation of what's going on in China. Because now that the news is out, we are processing that information and trying to find the trades that come off of that information. Okay. The other big commodity, of course, oil, that had a very nice day yesterday, really pushing up to this 200-day moving average. But consolidating as long as we stay above this like 71.5 type level in USO, I can stay with the bullish thesis in some of these oil names, although OIH is getting a pullback right now. I do think some of those oil names work. We've talked about Schlumberger. A dip, I think, is a buying opportunity is what it comes down to in some of these oil names, as well as in some of these metals names. And if they don't get a dip and a small up move, it just means that there's really no seller yet, no main seller, no aggressive seller. And that's a great tool for me to look at. Look at AAM since you just mentioned it. That is right there, right at that inflection point, right at that high. So we're right there on AEM. I like that one a lot as well. But I mean, so I picked NEM, AEM, gold, Kinross. I don't think you can pick poorly right now in these ones that are trading near the highs. All right. So overall, big fan. Let's see how that all plays out. Vlad out of Brazil had a really nice gap up yesterday. Looks really good, touching this 100-day moving average. Maybe it consolidates before it goes, and that might be enough to just really get EWZ a little bit more bullish like we saw back here in August. So it's just the derivative impacts of what China has done. That's all I'm looking for, is all the derivative impacts of what China has done. Everybody's looking for that, of course. The market is trying to find those winners. And then I just need to find the signal that somebody is allocating capital to that idea. So I have to have this list of ideas impacts while I'm waiting for clarity in the chart for FXI independently. All right. Oh yeah, BHP and Rio, very similar ideas, very similar moves. BHP, really nice move, and then a follow through today. Pressing against that 200-day moving average. We'll see how that handles it, but it seems like we're getting a little follow through. Rio actually, to me, looks better because we've gotten above that 200-day moving average. We have very little resistance here around 69, and then we're starting to look in the low 70s. Implied volatility, same idea as NEM, AEM, Kinross, et cetera, gold, they all have this implied volatility near the middle of the range, and that is justified. We are seeing movement even without yesterday's movement. We were getting movement in the 25% range. Options still have a lot of leverage in these names. So looking for, like I said, a vertical can work. The Rios of the world, a little tougher without the weeklies, but the market seems to want to pinpoint a 72.5 move in Rio with the 2000 open interest for November. The October target price might see a little bit of resistance because of the 70 strike. At the end of the day, I'm not sure I see resistance at 70. I certainly see resistance close to that 72.5, 73 range. So maybe we can't get to a new high before November expiration. One of those verticals, like I said, spread trading it, looking for a multi-week move can be best suited, in my opinion, via a spread trade, as long as I can get the liquidity and the execution quality. 75, maybe 80 cents on the November 72.5 call spread would be another alternative there for me. But like I said, NEM, I think is the answer for me on that. Let's touch on CF because of MOS as well. CF had the breakout yesterday. So this is fertilizer, looking good, trading near the highs here. I like CF on its own. If your preference is more of a catch-up trade, certainly look to Mosaic. It's starting to show a little bit of this chopping up. So we went higher, pulled back, now coming up again. If we can get through this 20-day moving average, that sets up a move here to the 100-day moving average would be probably the rational, sort of conservative price target right in the middle of the range that was happening before we got the break. So if I'm targeting something in the 28.5 range in Mosaic, looking out, I can go to November. It's going to price in a little bit higher volatility. So I could try to go a little bit easier with a weekly here. November 1st, so I'm probably looking October 25th. It's okay liquidity, but if I can target the 29 strike as my short and the 26 is my long for around 80 cents. Again, this is all about trying to find some leverage where I'm getting it for around a third, 25 to 35% of the max value. And so 30% of this max value would be 90 cents. And I could get into this, it looks like, for around 75 to 80 cents. So 25 to 30% of the max value. And that seems like it's got some good leverage to me. All right. So that's all my big China stuff as I went through all these things. These are kind of some of the charts that I was looking at from my further analysis overnight and this morning. I said I wanted to touch on LI because I wanted to look at some of the open interest here. There's a building open interest here on these 24 calls. The implied volatility is spiking. It looks like somebody is still buying into this. We are getting a pullback in LI after that spike yesterday, very similar to FXI options or FXI movement. The open interest in the October 25s and 30s was about 2,000 each. And I'm not seeing that changing significantly here. So unless I'm wrong here, then it looks like maybe the open interest for me is, yeah. So it looks like it's not necessarily coming down. There was big trading in the 25s yesterday, buyer, big trading in the October 25s yesterday, but it doesn't look like it was necessarily a full-on closing trade. Maybe one side was closing and somebody else was getting short. So one person out there was buying, probably buying back a short and giving that short position to the market makers. And that actually could cause some increased volatility in the stock. So I'm not looking at these as being the magnet that they sometimes can be when the market makers are getting long these strikes, because volatility is spiking, the market makers are getting short these strikes, and that can actually create a springboard effect as we approach them. So if we start to rally further in LI, that could create some nice leverage to the upside. But, with implied volatility here in the fair range, I don't see a problem with being long those options given the recent movement. I'd like to see, tomorrow, if this or into this afternoon, if there are buyers of this first dip or not. The technicals are very short term on this. Even the daily chart starts to get a little bit hairy because I'm looking at very, very short-term signals of, is this accumulation phase still happening? So intraday, I'll be looking at like an hourly chart, or a 30-minute chart, even a 15-minute chart, looking for that accumulation. I'm not seeing it on the open. We'll see how it goes throughout the day. Okay. Yes, I started looking at steel as well, and I didn't see anything moving either. And that could be another derivative impact that just for some reason didn't play on the first day. You can see Cleveland Cliffs did have a little spike yesterday, but it's nothing to write home about. So maybe that is an opportunity. There's a lot of resistance here, though, in that 12.5 to 13 range. This is a stock where if I wanted to go into it, I'd probably just use it as a stock position. Stop out if we get below 11.5. And as we get towards 13, I look to replace stock with options, noting that this earnings on October 21st seems to be creating a pretty high implied volatility, making that, this is insane. Doesn't make a lot of sense to me. The options are not cheaply priced. The answer could just be a put credit spread, expecting prices to stay above 11.5. For that, I like to look out, again, this 3 weeks saying I'm not necessarily bullish enough to go for leverage when it's expensive, but I'm certainly not looking for a leverage downside move. And I could sell like an 11.5, 10.5 put spread in the 30 cent, 25 cent range, expecting no leveraged or trending down move in the steel sector for at least the next few weeks, barring something completely unheard of, I think, from non-farm payrolls weren't a huge drastic impact on CLF, though, in either August or September. So maybe there's just not much to worry about there, and that put credit spread could be the idea. So an 11.5, 11 type credit spread here in CLF makes some sense. NUE on the same note has that earnings on October 21st. Earnings are really normally 5% kind of move. Yeah, that's more than the normal implied volatility, 2% on a day, but it's a very traditional, what we get priced in is kind of what we get right now is pricing in more than that. So I want to factor that into my decision-making process here, but I would like to sell a put spread that expires before those earnings if I go that route. So for, NUE, staying above 145 could be a really good price target. And looking at in October, here we are, 145, 140 put credit spread for about $1. Sorry, 145, 141 for about $1, or 145, 140 for about $1 in a quarter. All right, so $1.20, $1.25. Again, it's not huge leverage, but this seems like a better probability trade for the moment, given where the options are being priced. All right. If you're looking for the leverage type trade, it's not here. This could be one of those slow, sort of boring trades that accumulates some return in the profile, and that's not a bad thing either. So rather than looking for that big upside move, just saying, at the very least, I don't see us collapsing in NUE or CLF right here. All right. Let's go back to the broad market now that we've kind of wrapped up some of the China stuff here. And I'm happy to look at some other China-based names after. But I've got a few other things I wanted to touch on, including Micron earnings this afternoon. So S&P 500 drifting back near these September 19th highs. There's no sign here of a stall in this market, in drift. I don't know if there's going to be some risk reduction into non-farm payrolls next week. I'd expect there might be, and dips can be bought. Still in this market, it appears. Non-farm payrolls has proven that somewhat wrong on the short term, but right soon after. So, if I look at where we were right before non-farm payrolls in August, it took about a week and a half after non-farm payrolls to unwind that break. It took about, call it a week after non-farm payrolls to unwind that break. So at the end of the day, it really seems like even though the skew is showing that people are basically selling put spreads by selling straddle and buying the out of the money put, I kind of think the market's right on that, and I'm okay with that kind of philosophy. Stay above 565. That's my support. Looking for a way to trade off of a continued higher price action. If anything on this, alternatively, not fundamentals. Who cares about the fundamentals of the S&P 500? There could be a justification for a put calendar as well, instead of a credit spread, knowing that, if we do dip, then at least I get that implied volatility through my strike if I'm wrong. The follow through move on non-farm payrolls has been happening on Monday. 11th 565 put. It's not an expensive calendar, 13.5% versus 13.85%. It's not a great trade. It's an okay trade, but it's an alternative if you're looking for something for some small pullback and then potentially go, because I can collect that data on that small profit take normal break on non-farm payrolls. Okay, so if I'm looking for a dip on non-farm payrolls, two ways to trade it. Put credit spread, which is going to have a long delta, so it will potentially lose money at first unless the theta is offsetting it fully. Or put calendar, which actually gives me, I think, the best of both worlds because it eliminates that delta and it starts to give me more theta. All right. So that's kind of how I'm keying in on the S&P 500 here, is more of a put calendar trade. I've said it a few times. I'd like to see tech pick up some leadership here. When I see China, that's going to be driven by semiconductors, and we're starting to see that follow through today, getting pushed through that 100-day moving average, but it's not as bullish as tech yet. I need to see this taking the leadership role instead of that somewhat laggard role. Okay, we're seeing it up 0.5% today. We're seeing tech effectively unchanged. We're trying to get some rotation within tech towards the semiconductors, and that can be a good sign. It may take a little more time, but I'm starting to get some leadership in tech. Apple down and semiconductors up is basically what we're seeing. So that's not a bad thing. Moving out of the mega caps and towards those kind of names. Of course, the big boy is NVIDIA, and that looks a little bit better than SMH. It is trading closer to the overall highs because the August highs were close to the overall highs. These are all bullish indicators for me. The downside trade for me is still and always will be AMD, hitting that resistance point right now, and I can hedge a bullish portfolio, I think, pretty well with like a 145 put. I like November better. Yeah, it's going to be priced in for both earnings and the election, but if we get major problems, $5 for that put is a good portfolio hedge. It is not indicating to me that this is going to break now. I'm not seeing that rollover yet, so patience would be key. I don't need that put now unless I feel like I need a hedge. And if I need a hedge, I like AMD for that purpose, just because of the way it has retested these lows and looks like it would have downside towards the 140 range or lower, and earnings could do even more to that. That said, I probably wouldn't be holding this hedge through earnings or through the election unless I needed to keep shorts on. But there's going to be something to rotate into if the market starts to break. ARM positions. Yes, let's look at and then I'll come back for small caps. ARM. Ooh, okay, yeah. So we're testing this resistance here, and 180 would be my target if this can push through. You see how it really had a rough July. I like ARM. It has a very tech component to it. We'll go through the weeklies. Big volume here. It looks like covering some set 150s. Implied volatility up here. Maybe it's a butterfly position being closed more than anything, or kind of a ratio butterfly, because you see the big open interest on the 145s, 50s, and 60s, and the big volume on the 145s, 50s, and 60s. Excuse me. This could be a little bit of cleanup coming into expiration. Nothing interesting in the next week, nor the following. So let's get to the monthlies. Every $5 seems to have some good open interest, but it's spread. So that's a good thing, I think, overall, because every time we start pushing through 145, we start looking for 150. We push through 150, we start looking for 155. There's not a general high probability magnet price point. Most of the open interest is call side, very little put. Overall, I'd say I'm not concerned by any of these numbers in terms of slowing down or stalling a move. Not at all. No. Long-term price target. These 150s are probably irrelevant by that point because it's a $40 straddle. So overall, I don't see anything on the positioning that concerns me. So then I just start looking for my technical target of 180. That's going to take time, most likely. At the very least, a month, likely longer, would be my horizon on this. So I have to be at least November options. But I can trade this with some leverage to 160 with like or 180 with like a December 160. I almost call it $6. Round it'll be a little less than $6. But I like ARM for a 180 price target debit call spread. All right. Since we're touching into this, no, I'm going to wrap up IWM first. We'll come back to individual names of Micron for earnings. You see small caps underperforming still today. We're looking for a bull flag. We're not there yet. The drift down today is still some of that market rotation, going back into tech, going back into semiconductors, meaning we're moving out of the small caps, we're moving out of the small cap financials. Financials as a whole are actually getting hit a little bit here. So we're not seeing interest in small caps. This may be a short-lived trade for the small cap leadership that it was trying to demonstrate. It may just be a little bit of a pullback. Bull flag. Got to see a higher high and a higher low. I don't see it yet. I've seen 4 days down here. I've seen multiple 4 days, 5 days down in IWM. This is indicating to me that this dip is not being bought yet. It's not the exciting sector for people. And it's a pause and wait and look for, to me, JP Morgan as the big name. Seems to be want to be the first one. It's not participating in that break. Once I see a bull flag, I can look for JP Morgan and move back towards 220. So we've got some slowing here in the small caps, and it's got to be monitored. Okay. Check my list here of stuff I want to make sure I touched on. Last I've been talking about it is Bitcoin. So first we look at Bitcoin itself. Another one that I like off of this China move too, of course, because it kind of has that commodity element, that risk on element, tends to go up when tech's going up. It tends to go up when risk is going up, is being allocated. Sitting here doing a little bit of consolidation, but it did test these highs. This doesn't have any bearishness to it to catch up into Mara. You see we're testing that inflection point for the next move towards the 18.5, 19. Riot that, I've got some weeklies here for the 8s because I talked about a small position, and then I've got some October 9s. This looks like this stuff wants to potentially have a little catch up, a little bit of recovery, given what Bitcoin did, and then seeing Bitcoin not immediately fall back. I think people are looking for value within the Bitcoin space, and that's where Coinbase also kicks in. And as I've said before, and I'll say again, I like Coinbase targeting 200. All right, targeting 200 in Coinbase looks logical. We tried to make this little bit of a upward trend break yesterday. It didn't get follow through. We bounced back into the range. Kind of like a doji star kind of look here to it. Seeing a little bit of bullishness today. Staying above yesterday's high and the day before's high would be great. Right now we're slightly below it. Yesterday's high was 172.25. It's not going to impact my execution too much on a 180, 200 call spread for November. Actually, not November because of the earnings. I got to look for October 25th now. Looking for something in that 180, 200 call spread range, $6. Really decent leverage there, 30% of max value, really decent potential move. And so I like Coinbase, Mara, and Riot all together as long as Bitcoin doesn't start pushing down into that 62 and lower range. And right now, that's just not what we're getting. If you want to be a little purer with it, looking at the BITO options, this holds the futures as opposed to the cash, so it does deviate somewhat from Bitcoin. But an initial price target of 21, ultimately 22.5. There's some leverage there. would prefer to be in November, but October 25th for now. See, the liquidity right now is not good, but October 18th, we can just get some general pricing here. Looking in these like 20 call range in the October 18th, it's an outlier at a 30 delta. That's a good starting point for me in Bido, October 20th. But in the next week and change, really probably by next Friday, I'd want to try to roll this position if the options market can give me a decent execution to add another week or two to my trade. I just really don't want to be in the last 2 weeks of it unless it's moving. So if it moves, great. I may be looking to take some profits around 21 and move away from October. If it doesn't move, I either have to move on and get rid of it or move out to get more time. So I'd rather have more time, but like I said, the options market is trying to prevent me from doing that by pricing in that implied volatility in November, probably driven somewhat by a combination of having multiple non-farm payrolls and an election before that time. There is some uncertainty with how Bitcoin could react. Block broke resistance. I hadn't looked at block. Thank you. So block. Okay, so yeah, and then, it's a very natural price target here of 40. We're already mid-trend on this. It's been just grinding higher. Looks great for that vertical up to 40. No liquidity though, right? Almost none here on these options. Very little trading volume. Very hard to do with options. So I would probably use this just as a manage the stock position, have a trailing stop. If we get back here towards the 36 range, starts to get concerned for me as we push down then below the 10-day moving average, below some of these recent lows. But as long as we continue along with this trend, I think a stock trade towards 40 can make sense in block. And I almost forgot because I didn't write it down. Just touch on XLU again. I don't like buying near the highs of the range of the trend channel. We're right there still. So it's a check it every day, see where the opportunity is for entry. We're in the upper quadrant. I'd like to see us down closer to 79, 78 and a half before I'd be in here. Seeing it up a little bit today, up in the upper quadrant means it's a continue to monitor. Long a vertical with good entry prices near the lower end of the range, I can hold, but I'm not looking to initiate a trade today. Maybe reducing, not exiting because it's still got an upside here to it, but I don't think I would want to be purely initiating brand new here. I'd be looking to do a fuller exit around 81, a fuller entry around 79. And for now, it's just a wait and see on X79 exits around 81, and we're at 80. So there's no leverage return really for me there. But we should touch on PM and MO since we looked at those yesterday. Starting to show signs that this is a buying opportunity. If we get below, so it's about $1 of risk for 5 of profit. That's a good R&R. Okay, good risk reward profile. That's not. You can see I'm really looking at that first strike as my target, maybe up to the 130 options. So again, more of a put credit or a call debit. I mean, we do have earnings on the 22nd. That could have some action here. Generally speaking, some muted returns. 5% was a bad one. So if I don't want to hold through earnings, and if I'm doing a credit spread or an in-the-money debit spread, then I'd like to do it before earnings expire so that they can really decay. Looking at the October 18th, 120, 117 time put spread, 95 cents, maybe $1. There's some leverage, or not leverage. There's some good probability of success, I believe, in that for Philip Morris. Altria, as we know, very similar setup, had a bigger pullback, but the support here, $50, very clean there. Target is 55, just below, maybe 54. So $1 of downside, 3 of upside. No leverage in the options by trying to trade for $3. It's just not really much there. Buying this vertical for 65 cents in order to try to sell it out for $1.50 would be great or pretty good, but it's not a huge leverage type return. I'd probably So there is some money to be made on that kind of vertical in Altria, or going into the credit spread that, I'd have to be like a 50-48 put spread for a quarter. That's actually probably not enough money to justify. So Philip Morris may be more inclined to be a debit spread. 52.5 might be a stall point here for October. So again, going into November, maybe a 52.5, 55 call spread in Altria now is starting to make some sense to me here for 65 cents. I think that could, as I think about this, that could be an interesting way to play it. Okay. Let's touch Cintas. Yeah, it's been on part of a big trend. Nothing broke on the technicals from it. So the technical picture is still in check. It's still in place. The implied volatility has some downside. I think we'll settle in here around 16% before all is said and done. So downside to the implied volatility means for now, this like $200 level could be key. It's a big round number. It's a very good support level to have in place. I don't think I'd be looking to buy for a move above 210. This is a probability trade, and it's that credit spread again until the implied volatility can come down. There's not a ton of premium to sell on this for $1, but it's a decent probability that this is going to hold. So for me, selling a put credit spread, looking at the 200, 195, same exact thing is buying a call debit spread for $4. So either selling this for $1, buying this for $4, synthetically the same idea. And then just letting it ride out here for a little bit. Ultimately probably exit it as it gets towards about 50% of the premium return. So if I sold this for, say, $1, covering it in the 40 to 50 cent range, and then just moving to the next trade, and I think that can happen as this implied volatility falls post earnings. All right. MU is tonight. That was the next one on my list. MU earnings analysis. Let's talk through this. Market's pricing in 9%. We normally have 6. Recently, we've had 9. Market seems priced pretty well. So I have to have a technical target that makes sense and or potential for an outlier move. Remember, when I look at Intel, had a mega move relative to recent history. AMD was not. Very muted. NVIDIA on the actual earnings, very muted. So we've got, kind of a question mark here. Is this going to be the big mover? What are they going to talk about? Are they going to talk about their stock buybacks? Because if they're going to get aggressive with stock buyback because of the pullback, which they did before, getting into the stock buyback situation much more aggressively here back in August, if they address that, that could be that bullish situation that puts us to 108, 109. $13 is about 13%. That's an outlier type move. To the downside support, 85, 10% move. So if I'm looking for 10% to the downside and 13% to the upside as my small outlier, given that we're pricing in around 9%, can I execute this with the options? Maybe. Can I do it with the weeklies? Maybe. Big open interest on the 100 strike. I think if it's bullish, that doesn't hold. I don't want to consider that to be like a price target really for Micron. We've had so much bearishness in the stock. I don't see 100 being the stall point. I think we push through that towards 107. It looks like today this is all buyers. Okay, so it seems like maybe people are actually going on the bullish side and not selling the premium with the 100 calls, but maybe actually buying it. There is a potential there. Can I do a 100, 110, 120 call fly real wide? Maybe. So like 270 down to $1.30, about $1.45 on the upside. That could be an interesting play if I want a directional bet. 85 on the downside seems like a natural target. So I could do a combo here with a tight put fly on the downside, 90, 85, 80. So $5 wide is somewhat tight here, saying that would be was that about $1.70, so 50 cents, 80 cents on the put fly, and like I said, a $2.70, $1.30, $1.45 on the call side. So 2.25-ish on the net. If I should do decently on the 85 side, the double butterfly is probably closer to a break even if we hit 85. The real win comes on the call side. So because of the extra delta, because of the extra leverage to the upside, I'm thinking of the put butterfly as more of a hedge to the bullish case. With the bounce up here, it seems like the market is expecting maybe a little bit higher probability of the bull case towards 107 to 110 range. And I think that for me, that's the way I would do the trade in Micron. Gun my head, that's not a bad idea. I'll look at that a little bit more through the day. So that's a 100, 110, 120, and a 90, 85, 80 for the double fly. That's kind of my structure for this kind of trade for it. Okay. We'll see how it plays out as we get the earnings out. But like I said, I like doing that on a Wednesday earning into the Friday options because I'm kind of right or wrong. Like market action for Thursday, Friday shouldn't have a big impact on that butterfly working. It's going to be all about earnings. If we had non-farm payrolls 2 days after earnings, then the non-farm payrolls is going to dictate where this stock ends up, and it's harder to trade the earnings trade butterfly, okay, or particularly a double fly. But I think this could have some good potential via that sort of structure. It can have a little bit, Bob. Like so, Nvidia could have a small impact. But NVIDIA has been doing just fine, even with Micron general trend lower. So we're getting some separation on some of these, much like we get separation from, the airlines even where, Love trades a little bit differently than United, Delta, and American Airlines. TSM. Okay, so that, and maybe that has some greater impact, but I think that just general semiconductor sentiment, but non-zero impact from Micron on NVIDIA, on AMD, on Intel, etc. The other one to watch though, actually, now that you mentioned NVIDIA, and I didn't write it down, that's why I almost forget, right? That's why we write stuff down. Super micro. With NVIDIA rallying, I like super micro on here. It's not a cheap entry. We're dealing with high volatility, high dollar stock. So it's not going to fit for everybody's portfolio because the amount of capital required just to get into a minimum size trade can be high. But I mean, when I look at this chart and start thinking about 600, even 650 as a potential price range target, anywhere between 600 and 650 from current price of 470. If NVIDIA gets exciting again, if semiconductors get exciting again, everybody loves to pile into this super micro computer kind of trade. And, if I go short term, that's how I can get in this. I don't think 600 for October is going to make a ton of sense to me. It's a little hard with November because of the earnings. But even if I get into the weeklies here, try to get that extra week, a 5.25, 550 call spread for $6. I'm buying a low delta call. It's not a high probability trade, but 5.25, 550, widening it out, 5.25, 575. It could be an interesting way to execute this. $10 for a 50 wide call vertical, trading on the idea that if we do really start to see more excitement out of NVIDIA, I got to think Supermicron doesn't find much resistance at the $500 level. I really think this resistance starts kicking in the 590, 600, 650. It just might take some time. All right. So October 18th is questionable if it's enough time. But gosh, wouldn't it be nice if so, right? Getting into an October 25th, like I said, 5.25, 575 call spread could have a really interesting leverage type return for that sector. Okay. I like this, by the way. Going into the 15-minute chart, seeing what we're seeing here for the opening action in silver. The dip and then the buying, that's good. What was the China starting point? Yep, the dip and then buying. So this is telling me that people that were trying to take the overnight profits are being told no during the U.S. stock market. We're going to keep buying into China. So that gets me right back into that mosaic, that NEM. And NEM is hanging here. So NEM, I like a lot. And that I'm going to have to pull up here in a couple minutes and watch it for maybe another hour or two. But if it hangs and FXI is coming up and gold is coming up and silver is coming up, hanging near the highs, I'm loving that NEM, that AEM, all that sort of stuff here. AEM actually had a little bump here since the open. So NEM, sort of on a basis of the same day, it's lagging a little bit. But, if people start getting excited about gold miners and XME again, that's going to have to benefit. Okay. Micron still continuing a little bit firm here for that pre-earnings move. And let's see. Oh, and then I wanted to look back again at Airbnb. Consolidation still. So I think that, what we were talking about yesterday, getting above the highs or below that, below the lows is where the execution really starts for this guy. Got to just wait it out. There's other trades that are live right now, like NEM. Airbnb might trigger tomorrow or the next day or a week from now. Okay, more China here. So do we start to fill this earnings gap? That could be interesting if it does. We're looking for 140 in that scenario. How's the implied vol? There. That's not bad. Earnings November 19th. So I want to be out before earnings. So November 15th expiration. Is it enough premium to sell those in this kind of stock? I'm not sure. With the implied volatility kind of fair, I guess I suppose I'd have to. 120, 140 call spread for 340, 330. So it's kind of the same structure I've been looking for, but for those leverage type trades, there's a lot of open interest here right around where we're at. But if we start to push through it and we get through 120, we remove the overhead option-based resistance. Then it would be 140 in October, 150. So yeah, I think that the technicals and everything else is lining up here for a potential bullish entry on a 120, 140 call spread. And I just don't see any real option-based resistance between 120 and 140 on the strikes. So that's a good thing to see. If we start getting bullish, there's maybe a little bit of resistance here just over 120, but then my call spread's already working. And then 140 to kind of fill up that gap. Similar to what we saw in when Tesla filled the gap, right? Tesla started filling that gap here, and it chopped for a week or two before ultimately filling the gap down. Yeah, that could be an interesting one. And yes, that's I agree, Bob. That's the capital is not. It can be deployed elsewhere until the Airbnb setup looks a little clearer. And we're at such an inflection point, I can just pull it up every day and say, is today the day? Nope. Is today the day? Nope. Is today the day? Yes, time to move. Right. I don't know if you were still in KView. I actually haven't looked at this in a couple of days, but the dip was bought. The overhead resistance still going to be the highs. So kind of a stock kind of trade here again, or just, stock replacement if you wanted to preserve some capital with it by buying some in the money calls like the 22.5 for October. I just don't want to have too much premium that'll erode from a sit. But if only 23.5 is my target, only 40 cents, I'm not looking for a big leverage kind of return. So the 22.5 should be around 80 cents, and I'd probably end up getting out around 95. So, 20% return. It's a boring 20%. right? Home builder pullback. That actually could be another interesting one. I saw some good numbers. It seemed like a lot of refinancing of mortgages right now. It's holding its short-term support here in XHB, right here at this 122 level, right? The first low after the new high. What's your favorite home builder? DHI. That looks a little weaker. Probably not go there. Katie Homes had its earnings. Didn't look great. So maybe not there. Pulte? Nope, that's the wrong one. PHM, I guess. That's probably the best setup of those three. I know I'm dismissing other potential home builders here, but Pulte could be an interesting idea as long as the 140 level holds. Earnings though on the 22nd. So let's see. Cheap vol here is, it's not, I don't think I'm going to get the leverage from and out of the money but I would, so it's again, maybe more of an in the money or a credit spread. So in the money debit or put credit, probably looking at a 140, 1.5. Let's see, there's not there, that's 50 cents. So that's not too bad. Since this is more just about defining the risk anyway, 140, 135, $1.50, and let it decay, right? So 3.5 on the article, in that range for home builders for me makes a little bit of sense. So KBH, I would say it's the better catch-up trade, except for earnings. So it just had those earnings and it underperformed. If you're thinking that it's going to be okay, then it's all about just saying fine. Then I think it's going to hold above 80. I don't see this pushing to a new high without XHB, DHI, Pulte, something else like that. Actually, a vertical, an in the money debit spread or a credit spread. Being that it's kind of been a little bit of an underperformer on earnings, you could justify it. But then that's the same idea as Pulte as well, which is just got a little bit better fundamental position, apparently, given the earnings here, right? So my preference would be into Pulte, but I would be looking same idea here, like the support, ultimate support, probably closer to 77.5, but I'd have to play for 80 to hold this consolidation range from August. Not a lot of strikes, not a lot of premium for it, 80 cents for a $5 widespread. So I think Pulte is just the better trade for me in terms of the market, the opportunity to actually trade this market, because the dollar strikes, the weeklies, the greater liquidity, not a ton of open interest in the options overall, but there's more liquidity here than there is in terms of the option market than in KB Homes right now. PM, I'm considering that one now, actually. I actually prefer, I think even though Altria had the bigger pull, I think I like that better than the PM right now. Room to the upside here and a little bit more wiggle room to work with. I know it's the laggard, but a very clear support here is 50. Very clear. And the positioning should be lighter if that fails. So it doesn't have as much liquidation potential from if people have to start getting out around 50. So, there's something here with this. I think with that November 52.5, 55 call script for the leverage side, and then PM more for the in the money debit, in the money call debit spread, or credit put spread. Oh, on the PM, yeah. So just with scheduling and stuff, trying to get the mornings going and make sure I have time for everything else going through the days. But we'll get back to a normal schedule next week. I'll wrap up the mornings this week, and maybe I'm going to try to, I'm going to work with Vlad about trying to get a little bit of dispersion here between morning and the afternoon as well. But yeah, I think, for the bullish side, I think by winning trades of the day seem to be for me, and I'm going to just kind of reiterate them. NEM for a price target of $59 over the next 3 or so weeks. Altria for the outlier, and then if you like the earnings double flies, that $100, $110, $120 fly for Micron versus the 90/85/80 put fly. Let's see how we go. See how the day progresses. It looks like a little bit of selling the oil names and a little bit of buying in semiconductors ahead of Micron earnings. So let's see how we play out. All right, folks. That's it for today. I'll touch base with you guys in the morning. We'll touch on Micron and how that reaction went, and we'll see how the that second day of post-China move really plays out. Thanks again for everybody joining, and we'll talk tomorrow. Happy trading.